He runs the largest hedge fund in the world. Ray Dalio is one of the most successful, influential people alive.
He's returned more to his investors than anyone else in this space, which would be amazing under any circumstance, but becomes even more dazzling when you consider the fact that he started out as just another middle-class kid from Long Island.
Throughout his career, he developed a unique view of how the world works. He put his lessons out there for everyone to learn.
It's one thing when you're an economist in college or university. It's completely different when you have to bet your own money on your research. I would choose to listen to Ray Dalio any time of the day because he has skin in the game.
When Dalio talks, the world listens.
His advice and wisdom is eagerly sought on financial matters and economic matters by policymakers around the world.
In his pursuit of understanding how the economy works, he became one of the richest people in the world, worth $16.9 billion. Ray Dalio has led a successful life and career. After retiring from Bridgewater, he has been sharing his principles of success.
Ray Dalio is someone who has a lot of dreams and ambitions, but he's very realistic in terms of how to achieve his dreams.
With that mentality, Ray Dalio managed to build a consulting business and made his first million all before the age of 30. Born in New York, Dalio was a natural entrepreneur. The world of finance fascinated him.
I got hooked on the markets when I was 12. Well, the first stock I bought because it was the only company I ever heard of that was selling for less than $5 a share. And it worked. And it worked because this company was about to go broke and somebody came along and acquired it, then decided that I would be involved in the markets, and this game is anything but easy.
He taught himself how to sell short, and by the time he was in high school, he had already created a stock portfolio worth several $1,000s. Dalio thrived in college. He did so well. After graduating, he got accepted to Harvard Business School. Although Dalio flourished in business school, he wanted to have more real-world practice. In 1972, the summer between Dalio's 2 years at business school, he became an intern at Merrill Lynch as a commodity trader.
Commodities in 1970s have very low margin requirements and relatively obscure. It's kind of like cryptocurrencies today. There's a lot of volatility and a lot of speculators in the space.
Of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
On August 15, 1971, President Richard Nixon announced the U.S. would stop using gold standard to control inflation. The breakdown of the monetary system in 1971 pushed commodity prices higher and created the first oil shock in 1973. To combat inflation, the Federal Reserve tightened monetary policy, which brought the worst bear market since the Great Depression. More than ever, Dalio wanted to take part in the commodity trading business. After graduating from Harvard, he got a job at Shearson Hayden Stone as a commodity trader. At Shearson, Dalio was in charge of the hedging business, advising clients on how to hedge their business risks.
Hedging seems to be hard to understand for people who don't know anything about finance, but it's actually a simple concept. It's just like buying an insurance contract. In commodities, you can buy a contract that says you can buy, say, soybeans for $10 per unit in 3 months from now. This will give you peace of mind because you don't have to worry about the fluctuations of soybean prices with this contract.
But Dalio's career was short-lived. He was fired after having a drunken argument with his boss on New Year's Eve in 1974.
It didn't last long at Shearson. And that's how I started the firm.
In 1974, Ray Dalio started his company in his 2-bedroom apartment in Manhattan on New Year's Day. He called it the Bridgewater. His business model was simple. He would do his best to study the commodity market, then he shared his insights with his clients. In the late 1970s, many American businesses started their global expansion. As a result, they exposed themselves to various currency and commodity risks. Dalio understood currencies, interest rates, and commodities. While working at Shearson, Dalio has built a strong relationship with their clients. who now continue to pay Dalio for his advice.
That's how I started the firm, because the clients still wanted to do business
What
with
year?
Dalio built a reputation for quality research on macroeconomics. He published his thoughts in Daily Observations, his newsletter at that time. It became widely read by corporate executives, policymakers, and central bankers around the world.
In a way, Ray Dalio was a content marketer. Even to this day, if you look at his social media, he consistently publishes his findings to the world. He understood the power of personal brand before the term even existed.
Soon Dalio has attracted a following of powerful players in business. One of them was McDonald. He created a hedging strategy for McDonald to minimize its exposure to volatility of chicken prices. This allowed McDonald to keep a stable price for the chicken McNuggets. Dalio was content with his consultant business because it allows him to do what he loves the most, research on how the economic machine works. But in 1985, after benefiting from Ray Dalio's advice many times, the World Bank decided to give Dalio $5 million as a test portfolio. This is the beginning of Ray Dalio's career as a money manager.
So this might surprise a lot of people. Dalio never wanted to build a hedge fund. He was just happy doing his research. And even to this day, if you look at his videos online, he seems very down to earth. He would go on podcasts, and he never comes off as a hedge fund billionaire.
In the meantime, most money managers follow a benchmark, say S&P 500, to judge how a portfolio performs. But Ray Dalio wanted a portfolio based on pure alphas.
And then we have what we call our pure alpha strategy, because there's a separation between alpha and beta. Most investors make the mistake of separating those two and think that they're going to make money in the market. And in the zero-sum game, they're probably going to lose money from making those bets.
So when we talk about returns, they can come from two sources. The first source is beta. This is the type of return where you get from the market. So if the economy does well, you make more returns from beta. And the second return type is alpha. This is a type of return you get when you have some kind of informational advantage. Suppose you notice there's more cars parked at Walmart parking lot this year than previous one. And you expect that Walmart is going to beat its earnings for this quarter. And the returns you make from this trade is coming from alpha. It's because you have that advantage of the information. In probability theory, it's called independent events.
Pure Alpha portfolio is a collection of these independent bets, all based on Bridgewater's unique understanding of the market, better than any other participants. This strategy proved to be a success. Although it doesn't have the best annualized returns, it is uniquely uncorrelated to the market, proving to be a great alternative investment for investors. In 2020, Bridgewater has $138 billion under management, making it the biggest hedge fund in the world. But Dalio's ambition was never to become rich. Rather, he views money as a byproduct of his desire to seek truth.